A mining profit boom. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. I want to look at this article from Bloomberg that's been presented at Yahoo Finance about, record profits and blockbuster dividends. Here come the miners. So, have you been investing in mining shares, guys? How are they going? Let us know in the comments. But before we have a look at that, let's look at some current commodity prices. And here on Trading Economics, we can see coal is sitting at $146 USD a ton. I remember back in, hang on, we'll see how far back can we go here, 2011. It was at this similar levels. We'll see all data. No, they don't have. Oh yeah. Well, no, there we go. It was at close to this, $130 a ton around that. That's when we were working on a lot of coal projects, and that was, well, it flowed through to the CapEx that they were spending, the designs, the infrastructure, the accommodation, the mess halls, all of that. And you had some really crazy designs that were going for coal projects. Maybe that'll happen again. There you go. Iron ore, we can see it's come off the top. It's pretty high, over $225. It's down to $204 USD. Now, with regards to iron ore, our government has budgeted $50. And iron ore is a big part of the Australian economy here. For West Australians, where, well, most of our iron ore is exported from WA, 24% of the revenue of your government, state revenue, comes from iron ore royalties, everyone. 24%. This was in 2019 to 2020. So if anything, that's going to increase. So you just have to keep that in mind when policies and issues are coming up in WA. Because, well, the majority of this iron ore goes overseas to China. So there's demand for it. That hasn't diminished. But the price is going down. And then everyone's favorite metal, gold, we're sitting at $1,807. We can zoom out a bit further there to have a look. There we go. So, yeah, no, it's not doing much too exciting. We're up, still above the previous peak in 2011. What do you reckon, everyone? And let's have a look at some share prices too. We can see BHP is sitting at $51.93 Australian. There's that fall we had. Remember that big crash? And it's just powered right ahead. What's the dividend yield? There you go. 3.98%. Not a bad little dividend from BHP. And Fortescue Metals, boom, still climbing right up. Where's the fall? Was that it? Barely noticeable on this chart, the correction. 9.71%. I bought some Fortescue myself, everyone. So there we go. So we've gone through the share prices. Let's have a look at this article. And there are other companies there, but BHP and Fortescue, they're two of the big ones here in Australia. Let us know if you got in the Fortescue IPO, everyone, if anyone's watching. So, the world's biggest mining companies are about to start revealing how much cash they're churning out from this year's commodity boom. Look out for record profits followed by eye-watering dividend payouts. The top 5 Western diversified miners may have earned a combined $85 billion for the first half of the year, according to analyst estimates, more than double the level from a year ago. Rio Tinto Group, the first to report on Wednesday, is expected to announce $22 billion of profit for the 6 months, on a par with its total for all of 2020. So, just the 6 months profit from Rio is equal to all of last year. The mining sector has been one of the biggest beneficiaries from the world's efforts to emerge from the pandemic. The trillions of dollars poured into recovery packages have ignited demand for commodities like steel, iron ore, and aluminium, driving prices sharply higher and sending inflation pressures rippling throughout the economy. And while previous rallies lured the industry into ambitious investment plans to build and expand mines, many producers this time appear content to return their profit windfalls to investors. The two biggest, Rio and larger rival BHP Group, have already been funneling record returns to shareholders. Each of the group of 5 majors, which includes Glencore, Anglo American, Vale, are expected to report their biggest ever earnings for the 6 months through June. According to average analyst estimates compiled by Bloomberg, Rio could pay out 60% of its underlying earnings, according to some analyst estimates. This should be a should be a pretty much stellar set of results all around, said Ben Davis, an analyst at Liberum Capital. We're expecting record dividends from BHP and Rio, with Anglo and Glencore also having potential to surprise. Iron ore has been a big driver of profit for the largest producers. The world's biggest commodity after oil hit a record in the first half and has spent the last 3 months hovering around $200 a tonne, a level not seen in a decade. Steel and copper prices both set fresh records last year. Thermal coal has also soared, and even diamonds have had a resurgence. Some prices have retreated recently amid concerns about rising COVID-19 cases and as China moves to curb rising costs. Yet commodity prices across the board remain historically high for now. U.S. copper miner Freeport-McMoRan Inc. gave a hint of what to expect when it reported last week. The company has wiped out $5 billion of debt in the last 12 months, hitting its target months ahead of schedule and setting the stage for an increase in shareholder returns. For the iron ore miners such as Vale, BHP and Rio, it promises to be even better. Demand for the steelmaking ingredient, especially from China, is rampant and supply is constrained. China, which accounts for about half of global steel production, is making a record amount of the metal, while iron ore supply has never recovered from the two-dam disaster in Brazil. Of course, the mining companies are not immune to inflation themselves. Iron ore operations in Australia are grappling with a sharp rise in labour costs due to worker shortages, and government in resource-rich countries, especially in Latin America, are also looking at the industry as a source of extra revenue after the commodities rally. For now, though, miners are cashing in. There you go. So, what do you think, everyone? Have you invested in any of these miners? Are you in BHP? Are you in Rio? Are you in Fortescue? I mean, let's have a look. We'll look at BHP. 52. Wait, I already did, didn't I? We'll look at Rio Tinto share price. $129.42. And we'll go to 5 years. Again, that big crash in March last year, barely even noticeable on this chart now. What's the dividend yield? 4.72%. We'll look at Glencore share price. There you go, 315.75. We'll go to 5 years. There we go. They've returned. They're back to where they were. Dividend yield 2.73%. So, what's the solution, or really the takeaway to this? Have you invested in these shares? Are you in them for dividend paying? Are you working in the industry, even at the edges? Maybe I need to dust off all of our old mining experience and start hitting the phones again. Some of the modular, volumetric modular work we did back in the day. Could be, maybe. We'll have to see how long it goes. What do you all think, everyone? Oh, BHP went down a cent. As always, thanks for watching. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.